Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 20th of October. So I've certainly seen some turmoil over the last few days in trading, and we've seen some really important zones hit and basically rejected. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so Aussie USD is our starting point, and as we can see, it's done all of the things that we talk about basically every week. And really, when you look at it from, I guess, a bigger lens, it does look like it's starting to slow down a little bit at this area. And what I mean by that is, although we are still making lower lows and lower highs, you can see that we've found that support base at around that 63-cent mark. It has actually held up pretty well considering. And really, we have seen a lot of volatility inside a lot of these action candles. You can see a big wicks on quite a few of these, especially when they're testing the 20 moving average. So look, what it did here, obviously last week we were talking about it when it was around this level here. We knew 63 cents was support, and it really needed to hold there for us to be convinced that, you know, we're going to have a move off this level. It needed to hold up, and it did do just that. If you're able to trade that opportunity straight into the 20 moving average, what we talk about all the time, and yes, it is another lower high, no question about that. And the 20 moving average has pulled it up, and down it came again to test that 63-cent mark. So you had a really good up and down trade there if you were actually trading it actively, because it did all the things that we talk about in between the levels that we do respect. But one thing we are getting here is a bit of a flat line of what is actually happening. You can see the big moves have already passed, and you can see we're starting to really consolidate in this zone. So although we are making lower highs on the peaks, the troughs are relatively stable at that 63-cent mark. So it is still a line in the sand moment, and until we actually have a break below 63 cents or above the 20 moving average, I'm not really interested in trading this in any particular direction. But that said, it's open for scalping right through this zone. So keep probably your trade between the 63-cent mark and the 63.80, which is the 20 moving average at the moment. And then when we get a daily close on either side of those two ranges, then we can start looking at further opportunity. The preferred move would be up. Yeah, we don't really, it's a bit unknown on the 63-cent mark, so we could get moves down there. But ideally what we want to see is a move up above the 20 moving average. We'll trade either, of course, because whatever we get, we will take. We trade what we see. But either way, though, I wouldn't be doing anything outside of those bands until we get actually a solid daily close on either side of them. All right, over to the US dollar CAD. All the things that it needed to do, it did. It didn't thrill me that it failed at this high to make a new high, but look, it did find resistance there, and the resistance is previous from there right through these zones here. So it was no real surprise to see it find pressure at that point, but it came back down, touched the 20 moving average, and then off she went again. So, and really now it has broken through that high. Look, the trade was here, obviously, on the 20 moving average. It's what we always talk about. If you're able to get that, great. The target zone's generally the first place that found resistance the first time, so around that 137. I know some people got that because I got emails, which is great, which is really good, because it's exactly what we talk about all the time. Yeah, where it goes to from here is a bit confused. I think it's going to be really interesting to see if the pressure on the sell side comes in before it actually makes these highs again. It's finding itself at a place very close to where the bodies closed on these two candles. They were wicks that made it go all the way to the 137.80 area, and the bodies closed considerably lower. And it's not very far from that point. So I think that the 137.50 could probably cause it some grief, but it's one of those ones where I would probably not trade it just yet. I don't really like where it's at with a doji candle kind of at that area, because it could go either way really easily, and it's not giving us the signal that we're looking for. What I would do if it started to short off and we saw a series of lower highs and lower lows on a smaller time frame, I would look at putting a stop above this level here and maybe trading it back down to the sweet spot at around that 136.50, which will be where the 20 moving average will be again, and then reassessing at that point. But we know that's very strong support there. So, if we get any sort of weakness here on the smaller time frame, look for a scalp back down to here. But if it does start to break longer, look for pullbacks to the 20 moving average, and aim for the extreme zones at around that 137.80 until we get a break of that area. All right, over to the US dollar yen. The congestion is real now. It's starting to really tighten up at this level. Look, you could make a case. It's really an ascending triangle now. I mean, you can draw it up. It's most definitely an area where it's very interesting. I'm going to pop only that vertical line up there, or the line moving up on the bottom of the triangle. You can see clearly where the triangle is because of the support that we've got, or the resistance that we've got that will be support eventually. And we would like to think that would be the next case. What I would be looking for here is a break of this level, then come back and test it for support from above. That's what I would be really aiming for. 150 is an extraordinarily important level for this one. Round number, psychological level. There's a lot of importance that is based around here. It's doing all the right things for a breakup. You can see we've had a very, very strong move up, obviously. The 20 moving average has done its job. We're getting congestion underneath. The highs of the troughs are getting higher and higher. And of course, we've got the resistance right at that 150. If we get a break above that level, I'd wait for a pullback to it and then look for a reversal from there and then trade it onwards from there. Of course, if it fails here and breaks down past the triangle, I wouldn't look at shorting this until it was trading underneath the 20 moving average, because that's the only way we're really going to get confirmation that the momentum on the sell side will be enough to get us to a level where we can get a decent trade out of it, which is to around that sort of probably 148.30 to 148.20 area. That would be the zone I'd be looking for. But right now, it's quite strong. Bounce of the 20 moving average really aggressively here, as you can see. But it finds itself at a very interesting point. Very, very congested now. Probably best to wait for a breakout on this one before you take any action. But a breakdown from this level, and look at probably 148.30 as the target for any shorting opportunities. But it would be scalping at best on that one. I wouldn't be doing any more than a scalp. US dollar index. All right, so yeah, very mixed week. Did what it needed to do last week, held above the 20 moving average and pushed up, which is great. Came back down and tested it 3 times now, 3 days in a row. We've hit the 20 moving average and rejected off it, but it is still quite congested there. So really, the trade we're looking for is obviously the euro. It's giving us no more information than the euro is going to give us, so we'll go straight to it. The euro has found itself at that congestion zone as well, underneath the 20 moving average. It tried to break through, got reined in very quickly, but it did find support again at the 105.20. Look, from an overall pattern perspective, it's looking like it wants to change trend, okay? We've had a series of lower highs and lower lows all the way down, very, very clear downtrend. The first time it's pulled itself up again, it's made the lower low and lower high, sorry, as you can see. Then we've made the new trough here, which is higher than the previous trough. That's our first sign that this downtrend could be coming to an end. We've got the beginnings of what could be a lightning bolt, okay? So we've got the trough, the peak, the higher trough, which is the important one that's giving us a signal that maybe this is coming to an end. And now what we're trying to do is push up to a higher high. Until it does that, I'm not going to be convinced. It needs to trade above the 20 moving average, and it needs to trade above the 106.50 area before we get excited. You know, we know we've got problems here at 106 and 107. The high 106s and 107s are a problem straight up. So as soon as we get that lightning bolt out of the way, we know we've got a few issues straight away. But you could scalp that zone. When we do eventually get the daily close above the 107.20, which clears this area out and the moving averages out, and we've got a very clearly defined change of trend then on the daily, which is a big lightning bolt, then I'd be a little bit more optimistic for a bigger move up to around that 108.50 area. But until it does that, we're going to just trade that congestion zone, trade between the support and the resistance at the 20 moving average until we get that breakout, and look for this area here, which is key. Once we get that big lightning bolt effect, a series of higher highs and higher lows, we're off and running. If it fails at this point here and breaks lower, I wouldn't be interested in the short until it gets below the 104.50. It needs to break this area here properly with a daily candle before I would be interested in going any shorter, and then we'll reassess for the targets down there. So it's got a bit of work to do before it does that, and it's probably not the preferred trade, but if it does it, we'll have a look at it again with a fresh lens. But yeah, pretty good trading on the scalping side if you're trading inside that zone. And the all-important S&P 500 has finished this session on a very big low. It's had 2 very, very big candles down now, very ugly indeed. And yeah, we find ourselves at the 42 sort of 66 area. It's getting in a dangerous area now where if we end up here on Monday and say it's the Friday trading session is anywhere in this zone, we would expect that we'd probably find support around the 4,200. That's where it would need to find support, because if it doesn't find it there, the next real level is around that sort of 40, 50 area. It's kind of in the middle of nowhere now. Look, the trade was here anyway. I mean, if you're looking for shorting opportunities, as soon as it started to round off, the 4 hour is a prime example of it rounding off and looking short. That was where your short was. So it's kind of already in the middle of nowhere now. So it could reverse very, very easily. I'd be inclined to probably set my boundaries below around the 4,200 and 4,350. If you're going to scalp inside that zone throughout the US session, go to a 1 hour time frame or a 15-minute, look for 20 moving average pullbacks into the direction of the trend, the mini trend in that time frame, and aim for the boundaries of 4,350 and 4,200 until we get some settlement. There is a lot of news coming out. We've obviously got world events that are happening that are affecting the market. We've got earnings that are becoming a little bit mixed now, so it could go either way very, very easily. And I think trading both sides is fine if you're scalping, but keep your boundaries at 4,200 and 4,350 for the scalps until one of them actually breaks out properly, and then we'll look at it again and look for a directional move. So hopefully you've been able to get some good trades this week, because I think we've seen some really good opportunities at some very, very key levels. Have a great weekend, and I look forward to seeing you all next week.